going on, guys? It is Friday night, and we are closing out the 11th week of investing. Here on our channel, we invest $50 every day, Monday through Friday, into dividend-paying funds. So let's talk about this week of investing. It was chaos. And we said that on Monday. With the banks all closing, I shouldn't say all closing. Let's roll that back. With the SVB, Silicon Valley Bank closing, a lot of turmoil. A couple banks got closed. Other banks came in and kind of bailed them out, which is nice to see that, big banking corporations are doing it instead of tax dollars. So that's nice. But that was pretty cool to see. But we're going to take a look at the YouTube channel tracker, so we'll kind of see where we're up to date on that, where we're doing well, where we're doing worse, and then go over some stuff that we ran into through the week. So let's dive into it. All right, so here on this blue line in our YouTube channel tracker spreadsheet, we have that today's date is March 17th of 2023. My current weight is at 287.6 pounds. So put on a little bit of weight back, kind of where I was at the beginning of the month. So our total weight loss is now only 11 pounds, 0.1. So that's kind of a bummer. Investing balance. So our investment balance is currently $2,995.37. Our total dividends earned in this portfolio, little jump up there. We're at $12.31. So that's good to see. Total growth, we have lost $269.02. Part of this is a little, I made a gamble. I bought $50 of cheap out of the money call options on MPW, thinking that maybe I could try to recoup some of our losses. But it just continued to go lower. So we'll see what's going on with that. I'm still buying MPW on its way down every day. So, hopefully that rebounds. If not, that'll show what happens when you say, well, this is a little risky, but it looks okay. And you put it in your portfolio. But more on that later. YouTube income, we're still $100, which is cool. Total subscribers, thank you for the new subscribers. I really appreciate it. We're at 1694, so that's always cool seeing basically 10 a week, or 10 every 4 or 5 days, which is great. Total views, so we're at 167,667 views. We're not seeing these huge spikes in views anymore, or at least not lately. I wonder if maybe the YouTube algorithm is kind of figuring out who actually likes my content, or as our subscribers grow, we have the same core group of people kind of following along, which is awesome. That's actually the goal of this channel, is just to be motivating and honest. But haven't had a big spike in views in a little while. Watch hours though is consistently going up quite steadily, even though the views aren't plentiful. They are actual views. I really appreciate people watching the full videos, or putting comments and stuff, getting feedback. It means that people are actually watching stuff. So that's kind of cool to see, as opposed to picking up 10,000 views and then your watch hours don't really change. That's not, I don't know, it doesn't feel good. But this feels, I'm cool with this, actually. I like it. Thank you, everybody. I appreciate it. Hopefully one day this channel will actually generate income, and then I can focus more on making cool stock picks and better videos and hiring an editor, so my videos aren't just me in my triangle-shaped room. But so I want to start this video off, aside from the tracker, with where we're at in our SoFi balance, because this is going to be a little jarring, right? But the market's coming down, and everyone knows that, so it is what it is. So I want to focus on this unrealized gain column of a lot of our holdings, and right? So it's a little brutal. So NASDAQ, which we're not buying every day, this is just in the portfolio, and this is going to get sold soon and flipped over to JEPQ. But we're down $23.86 on that. JetQ, we're up $11.51. So this is the one that I said it's a new thing. It looks really good. I want to monitor it in the portfolio, see how that's working. Watch the dividend payouts, see what that kind of looks like. And this we are actually making money on, which is insane that we could be making money on a fund right now, with the market doing what it's doing. MPW, we are down $88.54, which is just so much money to be down. But that's okay. And that's not counting the $50 call options that we just lost. So that $50 is basically down the tubes. So yeah, brutal. But yeah, we're down $88 here. AT&T, we're down $13.88 total. Realty Income Corporation, so we're down $30.83 there. SCHD down $35. Jeppy, right now, Jeppy is designed to be a hedge against like down markets, so we're only down $9.28 on that, so that's good. Procter and Gamble. Now this is really interesting to me because Procter and Gamble, we're up $1.03. But when we jump into Seeking Alpha on the next page where we can kind of see what stuff's doing year to date, Procter and Gamble's way down. So the fact that we're up $1.03 is pretty cool. Pepsi, we're up $2.14, right? So that's pretty cool too. BlackRock, we're down $29. So, in the dividend investing world, there's a lot of phrases that people use to describe different stocks and all that. Procter & Gamble and Pepsi are the only two in this portfolio that are described as dividend kings, okay? And dividend kings are going to be allegedly or supposedly the strongest performers in a down market. They have the most reliable dividend paying history. They don't cut their dividends. They increase their dividends, and they have done that for at least 50 years. So for the past at least 50 years, for something to be called a dividend king, needs to have raised its dividend payout every year for at least the past 50 years. So while the market's coming down, they're still raising their dividends, paying people more money for holding the stock, which is a good thing for the stock's price, which is probably why we're still up. So that's kind of cool to see. But remember that. So we're up on Procter & Gamble, Pepsi, and JetQ. All right. So now we're going to dive into Seeking Alpha. This is basically where I like to track everything for our portfolio. I think it's a great platform. I really do. I think it's great. And you get a lot of news and updates and stuff here. But if we look here at Pepsi and Procter & Gamble, right, we both have about the same amount of money in each asset here. As we come across, we can see that Pepsi is down 2.3% year to date, and Procter & Gamble is down 5.72%. So, this is the true beauty of dollar cost averaging into a good stock. If I look at the year-to-date chart, because we were buying it here when it was expensive, but every day, we buy it on these lows and highs, and it averages out to be not that bad. So while it was down to 137, we were buying it at that, which is awesome. And now that it's come up a little bit, we're sitting pretty well. So that's pretty cool. It's just nice to see that the dollar cost averaging approach is working and helping us own some of these really good high value stocks for long-term positions. And we're getting them pretty cheap. Pepsi's going to look the same if I pull up Pepsi. So if we look at Pepsi right here, year to date, same deal. So even though Pepsi's down year to date, these big dips right here, we were buying it this whole time, so it cancels it out. And now all of these shares that we bought at these low points, those are going to pay us just a little bit better than the average dividend yield because we bought these stocks just a little bit cheaper. So it's pretty cool. Good returns. We should be getting good return payouts on our holdings, and That's the whole point, is to make a stock portfolio here that in the long term is going to be healthy and pay us out so we can just live off of the dividends without ever having to sell any stock in retirement. And then, maybe take on a job like being a high school basketball coach or something like that. That's something that I'd like to do. But the other thing, right? Let's look at these dividend yields right now. As these stock prices are coming down, our dividend yields are looking more and more ridiculous. So buying a share at MPW right now based on $7.73 price is paying a 14.48% return, right? As long as they continue to pay their dividend and they don't cut it, we're looking at huge returns on these, which is just insane. I can't even fathom that. Because if you buy that today and they keep their dividend the same, no matter what the price is, your dividend yield on cost is 14.48%. That's just what it would be. So pretty awesome for these shares that we're buying on the cheap, as long as they can recoup and get back to where they need to be. All of these little $5 investment days, we're going to get 14.48% return on investment for all these little $5 buys, which is just, it's ridiculous. JetQ, right? Their dividend continuing to grow. They have not even been through a year of existence, and their dividend payouts are just massive. I think that we'll see JetQ approach the price of JEPI for no other reason than if you put your money into JetQ right now, it goes much further than if you put your money into JEPI as far as income payments. Okay? I'm not saying that the asset classes are better. I'm not saying the valuation of the stocks that each one holds are better. I'm saying that just objectively, people want to get paid out more, right? So if you can put your money into something and it pays you out more, that's probably pretty good. I think that JetQ, I did a whole video on it and how it works and what it is. It's very undiversified. It's very heavy in stocks in IT and technology stocks. That's pretty much how it's balanced. So, maybe not all eggs in one basket, but I do think that if somebody's saying, well, I want to retire, if I put $100K into JetQ, it's going to pay me $15,000 a year. But if I put $100K into JEPI, it's going to pay me $11,000 a year, and they'll just throw it into JetQ because that's how human nature is. A lot of people don't do their own research. Like, for example, I am not a stock manager, wealth manager, credit counselor, financial advisor. I'm none of those things. I am just a guy in a triangle-shaped room. Okay? Do your own research. This is not financial advice. This is me holding myself accountable to make sure that I invest every day, Monday through Friday. Hopefully you guys find it motivating. And I would love for this account to blow up so you can see what it's like and what it takes, and that you can actually make some money long term if you can just stick it out for 5-10 years, putting in $50. Okay, so that's the point of this. It's not to give you guys financial advice, right? I made a video that I'm getting just absolutely ragged on because I said that I thought MPW by like mid to end March would be somewhere around $15, and it is at $7. So, I mean, if anything, I got the investment records to prove it, and you can see that I am buying it. It's just not going that well. Kind of funny being candid like that, right? But anywho, so as we come down, just to look at the values of what we've got in the portfolio, just to take a snapshot. Realty Income Corporation, or ticker symbol O, we are now above $500. So we're at $518. It's a really healthy holding there. I'm looking forward to which one of these gets over 1,000 first. So it'll be kind of fun. The price of Realty Income is coming down. And again, this forward yield is going up. This is another one that's continued to grow their dividend for the past 26 years. And they did just announce an upcoming dividend increase as well. So pretty exciting stuff to see there. SCHD, This is Charles Schwab's strategic U.S. dividend equity ETF. It's basically like a S&P 500 type fund, but with little more focus on dividend payouts. If this continues to drop just a little bit more and we see that forward dividend yield of 4% or higher, I think that the price is going to pump, because that's awesome. Like if you can get into a total market or a targeted market fund and it's paying 4% dividends on top, like that's great. Because this is truly like, this is a growth potential, not just a dividend potential. So pretty healthy looking dividend there. JetQ, we've talked about, loving it. Can't wait to sell my NASDAQ position to buy more JetQ. Pepsi. So Pepsi, this is the highest performing stock that we're putting $5 a day into. So we're at $276.59. This dividend is coming down because the price of Pepsi is going up. So that's okay. We're okay with that. We do have a dividend payout coming at the end of the month. So April 1st or so, we should see that show up in the account. Procter and Gamble, $276.19. So right there, neck and neck with Pepsi. These guys, two juggernauts in the dividend investing world, and they're performing really, really well in a pretty chaotic time. So cool to see that going side by side. Similar dividend payouts at this point. Really quite similar performing assets here, at least how it looks right now. We got JEPI, right? So JEPI is a solid monthly payer of dividends. We've got the $267.83. So, not quite even, but not a big loss, as we were saying before. I'm just excited to get more shares on the books so that as I get more dividends, I can buy more shares more quickly. AT&T. A lot of talk in the news right now about who's going to win the fight between AT&T and Verizon. So it's been kind of like funny seeing all that news and then just like nothing really ever happens from it. So like, I don't know what they're really talking about. I don't see any big, of course there's a feud between them. Like it's Verizon and AT&T, but, I don't know. It just continues to perform pretty well. Like I have HBO and like I watch some HBO stuff sometimes, I guess, that's owned by AT&T. It's good to see them like a little more branched out as opposed to just like being Fios. At least that's my opinion. I don't really know too much about that stuff though. But I do know that AT&T has a pretty good looking 6% dividend now. That's kicked up because the price of AT&T is coming down a tad. BlackRock. All right, so BlackRock, we are down, right? Pretty hefty. But so is the stock, right? BlackRock's not doing too hot right now. They have been fueling the flames of this whole bank thing. So BlackRock is one of those companies that's just massive. It's humongous. I like to joke that they own the earth. I shouldn't joke too much though, because they own the earth. So I don't want to, I like being on the earth. This stock has dropped over $100 since we've been starting this channel. And, because of that, the dividend is actually looking really good. Like this is a high paying dividend stock for a growth stock that owns like a tenth of the planet. Which is pretty cool. So I'm loving that big dividend. We should get some payouts next week on that. You can see that the payout date is the 23rd. That is next Thursday. So by Friday, that should be in our account. Looking awesome. So excited for that. But yeah, check this number out. Year-to-date performance, BlackRock, again, down 10.11%. So, pretty brutal for BlackRock. They are an asset manager, though. They've got a lot of stuff going on. It seems pretty stable to me. Not anywhere near the territory of MPW. MPW, we're at, again, $184.31. We got 23.84 shares. I'm loving seeing the share count skyrocket. Like, we're buying a share and a half every day or every other day. So that's it's pretty cool to buy like a share and a half every other day. I'm liking that. Dividend looks insane. We'll get paid out our dividend in April. Um, hopefully now because the dividend isn't getting paid till April, I kind of hope that it stays at like $7.73. But now that I've said that, it's going to skyrocket because it literally does exactly the opposite of what I think it's going to do. So what do I know about MPW other than I'm going to keep buying it and hope for the best. This is an interesting thing though that I don't want to discount is that years of growth. They are in a 10-year consecutive streak of growing their dividend. Okay, that's kind of important. That's like dividend aristocrat territory almost. You'll hear that name thrown around where if something's grown their dividend for a long period of time, people start to consider it like kind of a big deal. But then there's this looming where it does have a year-to-date performance of being down 28.1%. Not ideal. And then NASDAQ just is this I had in the portfolio before we started this thing. It's down to 121.99, 1.51% dividend. They already had the ex-dividend date yesterday. I think the record date was today. So now I can sell it off and I'll still get paid my dividends on March 31st. So looking forward to getting rid of NASDAQ. I mean, this might rebound a little bit. I think part of the big hit down was anything bank related or investment related, securities related, all just got hit. When one bank goes down and it's a big bank, everyone's like, oh, all the big banks are going to go down. So companies like NASDAQ, it doesn't surprise me that it dropped pretty heavy this week. But yeah, looking forward to get rid of that and maybe reallocating that to JEPQ. But that's pretty much that. All right. So with all that said and going over that, again, we kind of said at the beginning of the week, like we have no idea what's going to happen with the market. And well, that proved to be true. We lost $50 in call options that we thought would be hero calls, and they were not. That's okay. You win some, you lose some. With options like that, where you're just trying to basically place a bet. I'm very clear on that stuff. Like this is $50 that I plan to lose, but I think that I might make some money with it. Try to stay away from a lot of plays like that. It's not good. But you can't make money with them. So I don't want to discredit it either. If you feel like there's a basis to blow $50 for a chance to make what you think is an educated decision, do your research, and throw it out there. You don't necessarily even have to spend $50 to buy a decent call option position. A lot of times you can get into a good position for like $10, which is what I did, or at least I thought it was a good position. I just bought it 5 times. So that happens. I also, kind of interesting, random, totally unrelated to stocks, but kind of investing, I guess, is I decided to get into Pokemon cards a little bit. One of the things that I like is when a market starts really tanking, like somebody's going to sell off their collections of things before they're going to sell off like their house. So before you lose the house, you'll lose the Charizard. For those who don't know what I'm talking about, I'm sorry, but so I figured now might be a good time to kind of get into that kind of stuff. I think there's some nostalgia there for me, and it's a pretty cool asset class. Same thing with art, cars, watches, so I signed up for this subscription thing, and then once they shipped the package, I messaged them. I was like, hey, would you guys do a YouTube partnership if I made a video? So I did this live, and literally no one watched it. I made this live where I went on and I did this unboxing, and I opened some cards and a slab, and but here's the thing. Now that I've done that, I'm going to keep going. I actually got a pretty good result. So the subscription thing, it was $69 a month, which I know sounds like a lot. And you get one graded Pokemon card. right? Which sounds nuts, but I was like, maybe it's a good way to start. I don't know. Values are coming down, so maybe I can get something good. And I did. I got a card that sells for between 65 and 75 bucks. So I'm like very happy with that. I paid a good price to get a good card that people want to buy. And then I got some other stuff with it. They sent me some other stuff. I got this factory sealed in the box from like 2000, like players set, which is kind of cool. Yeah, 2000. This is from 2000. Um, so like pretty cool. You know what I mean? Little collector stuff. So maybe I'll be able to like pump out a little content for that kind of thing. If you guys are interested, I guess I'll throw the link in the description for that. But yeah, kind of cool. So yeah, I mean, just kind of getting some stuff together. First week of April, we're going to Disney World, which will be fun. So doing that and just kind of putting some stuff together there. Next week, I think if I was going to make a guess of what would happen, I think the market might go up a little bit. Way too much fear this past week of like, is my money safe? You know what I mean? When you have random people asking, is my money safe? That usually means people are just going to panic sell stuff. And I think there was a lot of panic sell. Who is it? Like Chase Bank or oh no, it was Charles Schwab dropped like 58% in 2 days. Like that's insane. That shouldn't happen. It did though. So I think there's going to be a lot of calm. I think people are very forgetful. And I think that people will be like, well, yeah, I mean, the market didn't totally crash, and you can still buy Charles Schwab fairly cheap. Let's start buying. Oh, and while I'm buying, Apple looks pretty good today, and that just kind of trickles up. So if I was to make a guess, I think in our portfolio, things that we might see pump, or not, I shouldn't say pump, but like stuff that we'll see kind of increase a little. I wouldn't be surprised if like BlackRock and SCHD, basically those two, like BlackRock and SCHD. I'd be surprised if at least through like Wednesday they didn't start to like trickle up a little bit, or start kind of regaining some of their ground a tad. We'll see if that call's right. I'm not sure. Obviously, I'm not a wealth manager, credit counselor, financial advisor. But, I think that there's some basis for that. And either way, I'm going to keep buying it every day. That's the best thing. Like, time in the market beats timing the market. Just buy it. Just buy it every day. Buy stuff you believe in. And I have no problem if MPW goes, well, I shouldn't say that. I would hate for MPW to go into the ground. I still think the fundamentals of the company are really good. I still think that when I look at their balance sheet, it's really good. So I believe in it. I'm just going to keep buying it. And if it doesn't work and something crazy happens, then yeah, you got to own it. It just is what it is. Like, you literally do own it. So that's your problem, I guess. And that's okay. Taking that approach to it, yeah, I think it's the mature thing to do. It's not the panicky thing to do. We'll just keep investing. At this point, to me, it looks like a great buy. There are a couple other stocks that I have been watching, so I might add another $5 or restructure a little bit how we're doing the investing. Still the same amount, if not more. But we'll take a look there. And, with that, I wish you a happy and safe weekend. Stay safe, everybody. It's St. Patty's Day, so, out here it's a big deal. Just, again, be safe, make good choices, call an Uber if you need it. And with that, I wish you happiness, health, and wealth. Roll the outro.